Hey traders, welcome back. I'm Kenya with BK Trading Academy, and in today's video, we are going to do an analysis of EURCAD. If you are new to our price action challenge strategy, or if you've been using it for some time, I'm going to walk you through the charts and show you exactly how to find your next setup. I've already produced an idea that was published about a few days ago on this pair, so we are in nice profit. And now I want to show you how you would get ready for your next opportunity with the rules that we use for this strategy. So before we hop in, do me a favor and smash the like button on this video so that this can be pushed out to people just like you who are in need of this type of content. Also, if you are new here, be sure to subscribe, hit the notification bell, and you'll be updated when we publish these content videos every single time. Also, if you are not following us on TradingView, I highly recommend it. You will find our TradingView profile in the description of this video. Otherwise, let's go ahead and hop right in.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
All right, guys, so I'm going to start out on the monthly time frame, and you don't always have to start out on the monthly. It's going to depend on the type of trader that you are, but regardless of the type of trader that you are, oftentimes I like to start out on the monthly or at least the weekly time frame, because the higher time frames will give you an overall feel for what the market is doing. So notice if we just simply look at the structure here of this monthly chart, we have an uptrend, okay? And price has recently taken out these highs here. So notice our previous high was right at 1.4730. We then had a high before that of 1.4797. Well, price came and broke both of those highs. And you can see here that we had a pullback after an impulse, and then we had a breakout or continuation. So price recently rejected off of this 1.5075 high. I can see that with my pure eye right now. And so that tells me that on the monthly, the price is possibly going to pull back to the previous level of structure broken, and then we possibly will see more growth to the upside. So what I'm going to do is draw a zone right there, and I can see that's where that structure was broken. I'm going to go ahead and move down to the weekly, for example, and now here's my weekly. Okay, so notice I have a level below price here that I spotted on the monthly, and what I'm going to do is go ahead and clone this zone right here. So remember, we're going to find our key levels. That's rule number one. So here is our key level. We saw that as price was rising on this impulse phase here, you look left and get a clue for where the price might turn around. So notice that this was our rejective resistance back in April and also May of 2023. So what we predicted was that if we were to short, because this trend is bullish on the weekly and the daily, it would have been risky to short, because look, you could have shorted here, but look how the price kept rising. So this is why it's always risky to short against a prevailing trend, because it could just keep going, right? You want to preferably trade with the trend. But if you have a good risk management approach and you're confident trading counter trends, I'm all for it, because I love trading very strong supply and demand levels like this. So you will see right here, this is acting as our resistance on the weekly. So if we were long-term swing traders, for example, we would have been paying attention to the monthly, and we also would have been paying attention possibly to the weekly. So if we wanted to hold this trade for maybe a couple weeks, we would have traded this uptrend here. So we would have looked for the uptrend on the monthly, and this would have been a really good buy somewhere along here where this monthly candle formed, right at 1.4632, which you can see this is a cluster of structure all the way to back in August of 2017. So a very strong key level. Okay. So now we're going to keep drilling down. So if you are a short-term swing trader or an intraday trader, you're going to look more at your daily or weekly levels. So you're going to find a level below price and you're going to find a level above price. So we have our key resistance above price, and now we have a level below price as well. Another thing that we can do too is that anytime you have an impulse, you can always measure that current impulse. So we're going to take our Fibonacci retracement tool. We're going to measure from the low of the impulse to the high of the monthly impulse, and we want to see about a 50% to 618 fib retracement. So that means that if the price does pull back somewhere near my zone, this would also be a confluence, because we would have at least a retracement to the 50% to 618 fib. You see that? All right, so now that we have that, we're going to continue to drill deeper. So let's go to the daily. Look how price fell from this level, okay? And now price is retracing. So remember I told you that price is due for a retracement on the monthly, right? So now that I have my key levels, what I'm going to do is trap the price inside of a channel. And once you get used to trading this strategy, you won't even need to use the channel because you can already see it with your naked eye. Okay, so here's your channel. We're going to be good traders though. We're going to go ahead and draw our channels. And now we're going to look at where possibly do we want to see an entry. One thing I can use is my 50 period moving average. In order for me to consider going long because the price is in an uptrend, I want it to come back to a decent level of support. Now, when you are using channels, you want to put your stop loss preferably outside of the channel or below the 50 period moving average. So what we want to do is look at this zone here, right, that we identified on the higher time frame. And one thing that we can see is that the price rejected multiple times within this area and it went down a decent pip size. So if I do this and then look how much the market declined from there. So I want to see, can price get to about this area right near my trend line support, stays within the channel and gives me an entry reason. Now, if I'm an intraday trader, I can go down to the 8 hours. So what I'm going to do is wait for price to get somewhere within this 8-hour time frame. And I'm going to look for a wick right off of this zone. So look here, I have price in an uptrend. Okay. I also have a bullish trend on the daily. So preferably as an intraday trader, I want to look for long opportunities. The price action is making higher highs and also higher lows. So I'm going to follow the market structure. So this is probably going to come back up again and then it's probably going to come down. But we want to see price come somewhere within our zone and wick right off of this area. So for example, what you would be looking for, you're going to look for additional confluences. Your additional confluence would be a flag pattern, right? And then if you see price breaking out from support and it's staying above the 50 period moving average, that could be a buy into this 8-hour time frame of EURCAD. Okay, so that is what you are going to look for. So notice as the price is coming down right now, you can even see, even though I'm starting from the 8-hour, you always want to start from the higher time frame, but this is where I pretty much marked it. So look here, you want price to come right here about this level. Okay, so this is your 8-hour, and it doesn't matter. Even if I'm doing this on the 8-hour, this will be the same thing. We're studying the same area on the daily. So no matter what, you want to find the best levels above price, best levels below price. Okay, and you're always looking for those key critical levels to trade from. So this is going to be our support level that, for example, we're going to watch on the intraday and we're going to wait until we have confirmation. Okay, so this is going to be our support. And now if we trade this, let's say, for example, if price comes to the area and gives us an entry reason, where do we take profit? So you're going to look to enter somewhere within this zone with confirmation, and then you're going to take profit near the middle of the channel. Okay, you want to trade from zone to zone. That's the smartest way to trade. Notice right here where my arrow is stopping, right at about, I'd say 1.4930. If I just bring my crosshair across, you can see that this was also a rejective resistance back in 2023. Look how much the market declined to the downside. And so it is also holding support at this level currently on the 8-hour. So that tells you, for example, if I clone this trend line and trap the price inside of a channel, and if we look to take profit in this uptrend, okay, on the continuation, then we're going to take profit at the middle of the channel because that's how we trade the channel strategy. So if you got an entry somewhere along here, you took it to the middle of the channel, that's actually 100 pips. But on an intraday trade, we're looking to go for about maybe 40 to maybe 60 pips or so. But what you can do is that you can put your stop loss and break even if you want to take it for a longer target. So what I mean by that is that if you enter right here, so you got an entry right at 1 point, let's just say 4,800. Once you're about 50 pips in profit, if you have more than one position and you want to hold one of those positions to a longer target, you can move your stop loss to break even, which means you're going to put your stop loss 1 to 2 pips possibly past your entry price. So put it at 1.4802 or 03. Okay. So guys, that is pretty much my analysis on EURCAD. What you want to do is be patient, let the price come to you, set your alerts. Once you receive the alert, you're going to check for confirmation of your rules. If you have all the rules that apply to the price action channel strategy or your system that you use, you're going to execute. As long as you have a game plan and you have a risk management plan, you're always going to do well, even if you take a very small loss. And that is the goal. You want to minimize your losses and you want to let your winners run, okay? And that takes time. So if you're not there yet, don't beat yourself up, but it will come. Practice, patience, fine-tuning what you do, getting mentorship, education, all these things are going to make you a better trader. So I hope you enjoyed this analysis. Comment below. Let me know what other pairs you'd like to see. Also, let me know your thoughts on EURCAD if you've been trading this pair or where you think it might be headed. And don't forget to always pay attention to fundamentals. Pull up Forex Factory or any other economic calendar like my FX book, and you want to make sure that you are aware of fundamental events because that could change the outlook of the analysis. Okay, I will see you guys in the next video. I hope you enjoyed the analysis, and I will see you soon.